Okay guys, welcome back to another video. So this video today we are going to cover top-down analysis. Okay, we're going to start doing our analysis from the large time frames and we're going to bring it down to the smaller time frames. So this is simple, pure price action. Okay, there's nothing else, no indicators, no confirmations. Okay, there's only some few let me say criteria that you have to make sure they're all aligned in order to take a trade, in order to execute. In order, okay, you're entering here, where are you heading? You're entering here, where are you leaving? Where are you getting out of the market? So sometimes they only teach us to enter trades, they only teach us to get good entries, how to see setups, how to trade the best strategies on the planet, which there is none. But they don't tell us how to manage, they don't tell us how to get out, they don't tell us where to get out, as a matter of fact. So I want to give you guys the most accurate, the most simple, accurate, but yet the most effective way approaching the market in a price action perspective. So right now, let's get straight up into this video. For those of you who are tuning in just new, my name is Gislen and you're watching the Forex Hybrid. In this channel, we share tips to better your trading. So if you haven't subscribed, kindly press that subscribe button and smash the like button. And let's keep going. Don't skip this video. I prompt you to watch it all the way to the end as there's juice as we go deeper. Now, let me start off. This is my pair, right? I have a forex pair here. It is CAD CHF, all right? CAD CHF. This is the Canadian dollar against the Swiss franc. Now we're on the 4-hour time frame. The 4-hour time frame is basically my everyday time frame. This is the time frame where I observe price from. But now I do my top down. I do my top down from the weekly or the monthly, and I drop it down to the 4-hour time frames. But now, how do I use my time frame? Sometimes I go on the 2-hour time frame for maybe clarity. Maybe I'm trying to look for a fair value gap. I'll go down to the 2-hour time frame, 3-hour time frame, 8-hour time frame. So that's how I fluctuate. But the 4-hour is my my everyday time frame. Now let's go straight up. I'll start off from the weekly and let's look at price. If it's not clear on the weekly, then you go on the monthly. All right. I advise you start from the weekly. Beautiful. So right now, what can I see here? Remember, what are we trading? Support and resistance, right? Support is a price level where price is bouncing at. This is support. This is support. Why is this support? Because price has bounced here twice. So the third time, you can trade from here. Now, why are we trading here? We are trading here because this area has held up price for a very, very long time. You guys can imagine this is the weekly time frame. You can imagine how long the price has made up here, guys, like months. Like, it's been here for a very, very, very long time, about a year or something, before finally breaking. So this is an all-time support. It's very, very important to note that. All right. So that is support. Now, what is resistance? Resistance is simply an area above price, which is blocking price from going high. Like this here could be resistance. I could draw this out as resistance. Why? Because you can see the price held this area, then immediately price broke below it. Price came back for a retest. So this retest here has confirmed this area as resistance. Why is this resistance? Once again, because price is below it. If price was above this area, this would be support. So when price is below it, is resistance, and when it's above, it's support, right? Right now, I have two levels here. These are called key levels. These are specific price points, price areas that I look to enter the market and trade. Because I'm a trader does not mean I just open my computer and I start trading. No, you're trading when you have a setup. And a setup is simply when price has entered your area of interest or your point of interest. So on this chart, where do I have interest? I have interest here. I have interest here. Now let's see what price does to these levels. After I draw my levels on the 1-hour time frame, on the 1 week, on the weekly time frame, guys, I have my levels mapped out. What I do now is I step down to the daily time frame and I try to refine the zones and make sure that the zones are well drawn, well aligned. So looking at this, I think these levels are perfectly drawn. They're perfectly aligned. So right now, I'll go down to the 4-hour time frame. This is where I execute. This is where I trade. Right? Now, what I'll do is I'll play price and see if price gets in there. Looking at this, guys, let's look at the daily once again, because on the 4-hour, you can see that price is actually really, really zoomed in, because that key level is from the weekly time frame. So trading it on the 4-hour sometimes is really, really, massive. So let's refine this. Like I said, try to make sure your key levels are as thin as they can possibly get. Like, try to get them as thin as they can possibly get. Beautiful. Now, clearly, this 4 hour time frame is too zoomed in. So I'll go on the 1 day to make sure that I have something that I can work with. Now, this is a price chart I can work with. It's cleaner and it's more precise. Now, let's play price and see what price does. Okay, now price has entered our key level. So right now, how do you enter a trade or how do you execute? Now we have resistance, clear resistance here. And now price is back. What I want price to do is price to bounce here and drop. Now, what are the criteria? Now that we have price in there, I want you guys to look at this price leg. I'm pretty sure by now everybody knows what a fair value gap is. Everybody knows what imbalance is. Imbalance is simply three stick candle. It is three stick candle pattern like this. Three candlestick pattern looking something like this. Where we have candle A, right? Then this is candle B, then candle C is right here. Now you can see that when the market forms these candles, it usually overlaps their wicks, meaning candle A and candle, this is candle A and candle C. Candle A and candle C, their lows and their highs did not overlap each other. If this candle's wick was this long and this one was like this, then this is overlap, meaning they have overlapped each other, right? Like they're touching each other. But now when they don't touch, when they leave this space, this gap is called inefficiency. All right, this is called a fair value gap. There's inefficiency here. And what the market tends to do most of the time is price will retrace into this gap, fill the gap, then continue to its original direction. That's what the price does. So I want us to look at this right now. Where can you see a fair value gap from what I've just explained? Now I can see a fair value gap here and here. Remember, guys, it's a three-stick candle pattern, right? So this is a fair value gap. But now the thing is, this fair value gap here has been filled. You can clearly see the price traded above this fair value gap, then it entered inside like this. So this fair value gap has been traded into. Now, what to do here is you ignore this gap. Don't aim or don't look at this as a valid gap. The gap is invalid right now because it has already been filled. It's efficient now. Price has already filled it. Look for another gap. Now, you might be asking, what are we looking for these gaps for? These gaps you're looking for are your targets. When you enter a trade, like I said, you need to know where you enter and where you get out. We've already figured out where we are entering because we've seen an area where price has bounced from multiple times in the past. So once we spot a fair value gap, we know that, okay, we are trading, we are making sure that once the price makes it to this fair value gap, we should be out of this trade because the market might reverse from there. Okay. And also, this also helps us, identify where or gives us assurance that price will, come back. So if we know that price will come back for this gap, that means we can sell here because price could bounce from here and come back to this gap, right? So this gap here is like giving us affirmations that price will come back because that's what we want price to do. We are trying to sell price and we want reasons to sell price. So selling from here is not the only reason you need to have. You don't need to just solely put all your eggs in one basket hoping that price should bounce from this resistance area. No, we want price to reverse from here. But now, does price have a reason to do that? Does price have another destination? Does price have a destination after this? Where is that destination? Where do you think price, or why do you think price should come back? You said price should come back, but now, does the price chart look, or does it tell you that it has a reason to come back down here? So it's your job to look for a reason for price to come back. So now we found a reason for price to come back because there's inefficiency here. Price should feel it. Good. Now with that info, I'm taking a trade right here, I'm taking a sell. And usually I use sell limits. Okay, don't come on here waiting for an engulfing candle or some kind of change of character. No. You simply enter your key level and you go a little bit deep. Don't enter the entry here. It depends how slim it is, but this is the daily time frame, guys. So make sure you enter a little bit deep into your zone like this, and you place your stops just above the last highs. Like I see this kind of high here. I'll keep my stops above that. Just keep it like that. Perfect. Or I shift it a bit high. Just put it where you know you'll be safe, right? Put it at a fair space where you feel like if price should break above it should tag you out before retesting and continuing up. So this space here, from this key level to this area, I think it's a fair space for me. So how do I trade this? Put my entry right there, my stop loss, my exit right here. Now this is my TP. You can see here that's a perfect 1:2. And if I play price, you see how price will find its way back into that gap, right? You can see that's price consolidating. And most of the times you see these consolidations and you'll be like, nah. Well, this is what the market does. It's going to tease you up, down. It's not going to be a coaster. And finally, price pushes down into this value gap and fills it up. Now, I want you guys to look at this, for example. How many days price made in here? Like, how long did price hold here? Once you're very certain that price will come back for this gap. Price will come back for this gap. It might not come back immediately, but it will. As long as you put your stop loss at a fair distance, price will come back for this gap. So that's exactly how a trade like this can be caught, right? So let's look for another trading opportunity. I can see price bouncing from this area, but I want more reasons to trade here. Like I want more reasons to take a trade here. So what I'm saying is I want price to push away from this area. If price can push away from here, then I'll look to buy. Now you can clearly see that price has already done that. Price has come and bounced again, and it's coming again for the third time. Now, is there a reason for price to go up? Where's your fair value gap? Can you see any fair value gap here? Yes, there's a fair value gap here. There's one. That's a fair value gap right there. You see, so the market actually forms these gaps. It serves as what? It serves as a reason. It serves as a purpose. So the market has purpose now. The market has a destination. It knows where it's going. So I'll take a buy here. I'll enter deep in my zones, like I said. Always do that, because price will not just come and pinpoint and go. Most of the times, it will consolidate like this. Then you can aim for this gap. So your exit matters. Your exit really is based on where the gap is in the market. That's where your exits are. All right. So you want to make sure that you're within that range. So let's see where price goes from here. And boom, that was an incredible trade. You can see that. So you can see that most of the times before price even pushes away, it is going to enter deep and deep and deep. So don't think as the market has tapped your order, it should just be going in your direction. Now, if it's going towards your stop loss, hold it. As long as you believe, as long as you trust, as long as you know very well exactly what you're doing, you are going to make it. So this particular strategy that I'm giving out here for free is something that I use. I use this and I grab 4-hour trade. Let me show you guys real quick. I grabbed a 4-hour trade, 4%. That's what I mean. Okay, let me go to my public group right here. Let me open this up. You guys can see biggest profit. This is it right here. So far, 4%. I caught this trade on GBP AUD. This is it right here. You can see how huge this move is. I held this trade. You can see it consolidated here as well, right? I held it for a very, very long time. And it finally pushed to my target. 4%. No jokes. Now, I don't usually trade 4%. If you watch my previous videos, I take 1 to 1, 1 to 1, 1 to 1.5, 1 to 2. That's my maximum. But I held this one because I knew for sure the price will get there. It doesn't matter when, the price will get there. So if I know the price will get there, I'll hold it. That's exactly what I did. So these are videos. These are setups that I send. I share setups here. I post updates here. So this is my free Telegram. The links are down below. Check my description for these links so you can join. This week, I'll be posting all of my setups in this particular Telegram. So if you're not there, you're going to miss out on a lot of updates. Beautiful. Now, meanwhile, we were saying, explaining this trade, we missed out on another selling opportunity. Now, let's go here and look to see if we can see a reason for price to push back from here to the downside. Now, do we have a reason? Let's start from here. Now, what I want you guys to look at is, look if you can find a fair value gap, a good fair value gap, by the way, because fair value gaps, they come around as a result of displacement. When the price is being displaced, there's three phases in the market that is up. There is an accumulation phase, there's a manipulation phase, and there's a distribution phase. You can see that price accumulated here with liquidity, then price swept it and immediately rallied to the upside. Now, this is displacement. But now, if you look at it very well, this displacement is not that powerful. Yeah, it is very bullish, but it's not that powerful. This is a powerful displacement. Powerful. You can see that gap right there. It's clean. The market getting that. But now, this one, most of the gaps have been filled. Most filled. The only gap that has not been filled is this one. And now this is where, this is my reason, this is my reason, this is why I would take a sell from that area into this gap. It's not every gap you see you take, guys. The ones that your spirit says you shouldn't, please don't take it. Just trust your God, okay? This is a gap here, very clean gap. No candlestick has traded into it. It's very, very unfair. So I think price should come back. So I'll enter deep in my zone. I'll put my stops where I put this previous one. So it's basically the same trade. All right. So I'll put my stops right there. Then I'll aim for this gap like that. That's a TVR. And that's it. Nice trade. Perfect trade. Like, these are insane trades. Feel me? This is how you can catch moves back to back, back to back, back to back, back to back, back to back. You can always do this. You can always do this. Feel me? Okay, so with that said, I want you guys to go on your charts and try to look for these levels. All right. Remember, go on the weekly time frame. All right, let's go back on the weekly time frame. Draw out your support, draw out your resistance. Come on the daily time frame, you refine them. Then you go now on the 4-hour time frame. Now, if you go on the daily time frame and you see clear support, draw on the daily, then you go on the 4-hour. Now, if you go on the 4-hour and you see clear support, you can draw it there. Then you go on the 2-hour. See how it works? Good. That's perfect. So now I want you guys to go and give it a shot, give it a try. Check it out. By the way, I have links down below. Like I said, I have an academy and I teach people, I train people how to trade. That's basically what I do. I'm a trainer and I'm a professional forex trader. So check out the links if you want to maybe work with me. If you're looking for mentorship or courses, I have everything for you. Just shoot me a DM on Telegram and I'll reply you instantly. I'll see you in the next one.